So it's moved from can we allocate to Bitcoin and more a question of how do we allocate to Bitcoin. But that change in stance is fundamentally different and really positive.
As the Bitcoin price drew down 80% and then recovered, and we were at a high return on our Bitcoin at the time in December last year, but our revenues had grew 37%, which meant we were in some manner negatively correlated to Bitcoin. We were able to purchase more Bitcoin as a result of that volatile period.
Even the most traditional family offices, they're like, yeah, but what if, shit hits the fan? How do we get access to this asset? Like, even though they don't technically fully understand it, but this is one of their concerns. It's like, what if?
I've had competitors in the same building as me now who have stopped me in the street over the last few months and said, oh, I've seen what you guys are doing with Bitcoin. The first thing we followed up with is, we should all be doing that, shouldn't we?
People first want to get exposure to Bitcoin. Then at some point they want to see proof of reserves, which is verification. And the final stage that they end up is
Good morning, everyone. Good to have you here for this session. So hopefully we'll try and make this as interesting and pragmatic as possible. So you've got some tips to take away with you to start your own journey, depending on where you are. So quick intro on me to start with. So I'm Sam Roberts, Director at Cartwright, and we advise, help implement, facilitate companies to on their treasury function, including all assets, but including, importantly, Bitcoin. So where'd you buy it, how do you hold it, what are your internal controls, what's your governance procedures, all those important things, lots around risk management. However, we're going to talk more about these three here today. So what I'm going to do is I'm going to pass down the line so they can do a brief introduction. And also, if you answer a warm-up question, which is from your point of view, we'll start here with you, Michael, and work your way down. What's changed most in the last year or so in how institutions, allocators, companies approach Bitcoin?
Thanks, Sam. Quick intro first. Michael Howe. I'm European Head of Strategy for Bitwise. Very pleased to be here. Very pleased that Bitwise is sponsoring again. Looking forward to meeting all of you and talking with you during the course of today. To your question, what's changed? I can tell you one thing I don't think has changed, and that is heavily indebted governments across most of the globe. And that's what got me down the Bitcoin rabbit hole many years ago. Maybe is similar reasons for a lot of you in the audience. And I still believe Bitcoin has a fundamental role to play in solving that problem in the fiat world. But to answer more directly, what I think has changed, I think from Bitwise conversations, from what we see, the stance and the posture is quite different. So it's moved from can we allocate to Bitcoin and more a question of how do we allocate to Bitcoin. And we can get into the various ways you can do that natively or through ETPs like Bitwise offers. But that change in stance is fundamentally different and really positive, I believe. And then I think you can also mention important regulatory developments as well. So the US moving from quite a hostile stance to much more accommodating and providing leadership, actually. The Genius Act and the Clarity Act. Hopefully the Clarity Act passes. Good examples of that. And we see in Europe with MiCA those frameworks evolving and maturing as well in very positive ways. So I'll touch on a couple of those elements as some of the most notable developments in the last little while.
Cool, thanks. I'm Jos Lazet, CEO, founder of Blockrise, Bitcoin banking platform regulated in Europe, based in the Netherlands. And I mean, it's been an interesting year for sure, because MiCA was introduced. And for us, it really gave this stamp of approval of going from a startup to talking with banks. We're offering bank accounts, we're issuing IBANs since recently, which was never open for discussion without a MiCA license. So that is one, and I think in general, to give another example, all the Dutch banks introduced Bitcoin ETFs this year, which was unthinkable because they used to block transactions from Bitcoin platforms. So I think we're reaching an all-time high in Bitcoin adoption. maybe more emotional level because the price does really reflect it. But it's been so much easier to have conversations with institutions, and you're not the strange kid on the block put in a corner, but you can actually have thoughtful discussions with the institutions.
Hi everybody, my name's Scott Ellam. I'm the CEO and founder of XCE Connected Excellence Group. So, we're a international, profitable executive recruitment company with an integrated Bitcoin treasury. I suppose, for a what's changed, we started buying Bitcoin on the balance sheet as a private business in 2021. And from 2021 to 2025, I think everybody in the room will remember, the price drew down 80%. The recruitment business, which places senior level candidates with the likes of, you'll probably recognize the PwCs, the Ernst & Youngs, big consultancy firms globally, engineering firms, logistics firms, USA, Europe, Middle East, and where we're based, which is the UK. So our revenues were growing 30% year on year, or 37% year on year compound annual, and we were buying Bitcoin as it drew down 80%, but we were kind of doing it secretly. We weren't announcing what we were doing to the market, we weren't telling our competitors, and last year I saw the opportunity to solve the three biggest problems in our industry, and I believe the model we have solves problems in other people-based, service-based industries where the businesses are capital light, they're cash generative, and there's an opportunity to scale directly as a result of scaling headcount. So headcount driving revenue. If you think outside of executive recruitment, marketing, accountancy, legal, all of those businesses. So we designed the business last year and took the business public late 2025. And that meant the conversation became public and our competitors were aware of what we'd done for 4 years. And then we're aware of the solution we were now providing to them and also ideally to their staff. So the business is designed to allow revenue generating recruiters, whether they understand Bitcoin or don't understand Bitcoin, to join the business and earn on top of their usual basics and commissions, performance-based shares backed by the Bitcoin treasury and the operating growth. And then for business leaders in our industry who are facing I suppose the biggest problem for business owners is most of them are between 1 million and 30 million turnover, and there's hundreds and there's thousands of them globally. And the owners are trapped because the headcount drives revenue, so you don't see competitor acquisitions and you don't see private equity come into our market. So the owners tend to work their entire career in their own business and then self-fund a management buyout, or do a management buyout and then hope that the staff who've not actually ran the business before from a legal, HR, finance point of view can do that and allow them to pay the buyout. So we've designed the business to allow those businesses the opportunity to exit into a public, scalable vehicle. And what we've found on what's changed is the dynamic of those conversations. We've had outreaches from businesses in the USA who directly compete with us. We've had conversations with businesses in our local area in Leeds, where there's 40 international recruitment firms come and have conversations with us, and companies in Europe. Now, not all of them are holding Bitcoin. Not all of them understand Bitcoin. And the people who we've employed since the start of the year haven't necessarily understood or ever held Bitcoin. And what I think you've seen is if you can integrate Bitcoin into traditional operating businesses and align the incentives with the team, then you start seeing natural Bitcoin awareness and adoption, and you see that driving forward. And we've got an office with people who, I've not asked them explicitly, but I get the feeling none of them have held cold storage Bitcoin over the last 8 years. But now everybody's aligned with Bitcoin, looking at the price of Bitcoin, which is one thing to manage, don't get me wrong, and watching Michael Saylor videos and just embedding themselves in it, because we've aligned the incentives to say, well, you've got some free exposure to this asset, and that means that as the conversations with our clients are happening, we're seeing traditional businesses who are telling us our operations are being massively improved in efficiencies by AI. Some of those clients are coming around and now we're kind of saying, well, you're improving your P&L, but what are you doing with your balance sheet? And there's not that kickback and that reservation and that sort of allergic reaction to the conversation about, well, we've seen you guys have got Bitcoin integrated into a balance sheet, but I don't understand it, but I'm not quite sure how it's working. And you just know they're going away from the conversation with a realistic chance of looking into Bitcoin, and I think that's what we've seen is it's not stopping conversations dead anymore, it's sparking thought and sparking conversations.
And that's a really important part, isn't it? How do conversations get started? So there's going to be lots of people that are listening to this panel who are going to be in a whole different stage of where they are on their own journey with all of this. So the next question I want to try and tackle, and you mentioned something, Jos, as well, which was about having opening conversations. Conversations are easier, I think, is something that you said a moment ago. So what's different? How is Bitcoin getting on companies' agendas? How is that first spark, really, of where the company is seriously taking this issue, rather than it just being maybe a personal interest of one of the board members?
I think, going from the core message of Bitcoin, where it's much more of a wealth protection asset. Of course, there's a cyberpunk asset. So this is what we see in, let's say, SME companies that just they're making money, but they have cash on the balance sheet and they're seeing it loses relative value, so they want to hedge against it. And this is, at least in our business, where we see majority of the cash flow come from. So this can be family offices, this can be SMEs, even operating companies that are allocating Bitcoin. And controversial to maybe this the institutional flow that we're seeing. We look at it from a perspective that people first want to get exposure to Bitcoin, then at some point they want to see proof of reserves, which is verification, and the final stage that they end up is ownership. In the end, you want to have independent ownership over your Bitcoin. This is the be your own bank mission of Bitcoin. And I think that the first steps have been made, and there's lots of cool solutions out there, and I support them. Financial engineering on top of Bitcoin is cool stuff. But in the end, we should all focus towards this ownership part. And this is where actually, especially in the last 6 months, we've seen all of our traction, because you need to find the fine balance between, product design. It should be super easy to use, but you want to have this ownership of Bitcoin. And this is at least the standpoint that we're taking, and this is where we can say all our traction comes from, because this is exactly the solution that we built. And funnily enough, even the most traditional family offices, they're like, yeah, but what if, shit hits the fan? How do we get access to this asset? Even though they don't technically fully understand it, but this is one of their concerns, is what if?
So just to pick up on that a little bit, so historically, of course, it was, custody was quite difficult and difficult to justify from a corporate perspective, but I think what you're saying is that the solutions available now are much, much easier than they used to be, and that helps to lower the barrier to entry for some.
Yeah, I think in the past we only had two solutions out there. It was either technical self-custody solutions or custodial. And we see this huge development in hybrid solutions where you have best of both, basically. And we did a press release this morning, so I'll quickly refer to that everyone deserves Bitcoin custody, and we just lowered the fees to 0% for custody. So there's no more barrier to hold Bitcoin with us, and I think that we all know that in a matter of years, 1, 2, 3 years, all the custody fees will approach zero, because, this is not a competitive game anymore. It's about financial engineering, and that's where we should make the money.
Michael, maybe do you want to pick up on the custody side?
Yeah, absolutely. So firstly, congratulations on the announcement, the zero fee custody. That's something, a trend we see as well. At Bitwise, we've been in the trenches, for nearly 10 years, and have, I suppose, come across a lot of the themes which can present barriers to adoption, custody being one of them. And I think custody is, along with one or two other things, like a really formalized, signed-off investment policy at the highest levels, and probably an operational model. I'd say those three things: an investment policy, custodial approach and an operational model are absolutely vital for an organization to consider when embarking on their Bitcoin journey. And the approach you take will vary, and solutions are evolving constantly. So there is actually quite an extensive menu of options now, which will hopefully help you achieve your goals. And some of the Bitwise products and options are, of course, solutions, whether it's ETPs that we offer or separately managed accounts or whatever it may be. But yeah, we note the custody developments. It's a key part of the solution, as I said.
What do you want to add, Scott? I want to save a bit of time for a good question for you later.
Yeah, I think mine's quite simple, really, because I was in a very fortunate position that I was 100% shareholder of our flagship operating business, Spencer Riley. And because I've been through a personal Bitcoin journey from 2016 to 20, I've dealt with how do you self-custody? And when we put it on the business balance sheet, I thought the most robust way of us protecting the Bitcoin that I'd bought on the balance sheet, given that it was a private company, was multisig and distributed safety deposit boxes, retinal scanners, all of that kind of thing. But then when we moved towards PLC status, and I had to build a board, which Sam, obviously thank you for being our non-exec chairman, by the way, and partnered with Cartwrights and worked with the team, with Sam and Arash, to build the policies, to build the governance, to do the deep due diligence on the liquidity providers and on the custodians. I came at it from quite a Bitcoin maximalist angle. And I think you'll remember the one key characteristic that I set out that was a non-negotiable for me was the ability for me to see our Bitcoin segregated with proof of reserves and a watch-only wallet, regardless of whether we chose to do public proof of reserves or not. I wanted to ensure that was internal with any provider we partnered with. So I think partnering with experts and being able to be the owner of the business, building the board, I could make sure that it was fully Bitcoin aligned. I think that will be a huge challenge for CEOs who are trying to move onto Bitcoin. And it's a conversation that experts like yourselves need to be having more often with those Bitcoiners in businesses who are thinking about adoption in the future now.
But don't you feel like you have to make sacrifices then towards your custody setup if that is the best that you can get?
As a public company, there's always going to be trade-offs between what you can and can't do. And if we launch convertible bonds at the start of the year, and you've got high net worth private individuals, I don't think Adam Back's in this room now, but he was in early, he participated in the bonds. You just think the added complexity of picking one trade-off over another can have second-order effects that as a public company, when you're making an RNS announcement, it has to go out at 8 a.m. the night before. You don't want to see any on-chain activity. And I know that can be, there are workarounds to that, but we're running an operating business that's designed to scale as a result of Bitcoin. So the priority of a business is to focus on doing what the business does best.
Yeah, but I still think that there's so much to win, so watch-only addresses and, on-chain activity. You can do time locks and you can make sure that the transaction is already valid, signed, just published the next day at 8 a.m.-ish, depending on the block time. But there are so many Bitcoin native solutions out there that we can use, but instead we are usually moving to a custodial environment just because of the regulatory check marks. And that's something I constantly want to challenge, because we shouldn't make sacrifices when it comes down to Bitcoin custody, because in the end, we lose control, we lose the ownership. And that's the whole purpose why we came to this place in the beginning.
For me personally, I am cold storage Bitcoin. And I, as an individual, that is what I recommend. Running a PLC, you do have to take other things into account. And ultimately, we're an operating business with an international recruitment firm first, integrated Bitcoin treasury. And what we have right now is adequate for the level that we need for our investors, and easier to communicate to the traditional investors that we're educating over the next 4 years to bring them on board, than having a detailed conversation about something that they're at the very start of that Bitcoin journey. And we're confident in how robust our custody is, that we don't need to overcomplicate it right now.
I still would like to vouch for how you have your personal setup done. We should be able to also work on this on the corporate side of things and find a better balance in.
You're right, Jos. Should we have a chat later?
You can pitch me on it.
I mean, just maybe to round it out. So I hear you, and to some extent I agree with you. But at Bitwise, we are constantly completing DDQs, due diligence questionnaires, right? Whether it's a massive wirehouse in the US or a German retail platform or whoever, some kind of partner type. And the complexity and detail in these DDQs is increasing and continues to increase. And of course, a huge focus area is on the custodial approach. And our approach has been what's quite normal, I suppose, in the ETPs and ETF space. So we have a handful of regulated custodians who we've relied on as partners for a long time. And you can see them on our website. And those always pass muster through these DDQ processes, rightly or wrongly. Maybe the conversation should remain open, though. I agree with you there.
Let's take a slightly different, well, maybe that's actually a good example of what I'm going to talk about now. The principle is that there's still a lot of skeptics out there, and the way that a lot of organizations, companies, maybe in particular, but pension funds and charities too, there's a committee or possibly committees that need to be convinced, possibly unanimously, as to whether they should consider Bitcoin at all. So we should take their concerns very seriously. And so if you could explain maybe one of the pushbacks that you get, just to help to, we want to recognize that they exist.
Absolutely. So there's always, this concept of FUD and like FUD du jour maybe. And if we wound the clock back, maybe it was Mt. Gox hitting the headlines and that being the reason why we shouldn't or couldn't adopt Bitcoin. Maybe after that it was governments are going to ban Bitcoin. And we've come through all of these issues. Maybe today it's the quantum threat, and I think it's really encouraging how the community and the industry is gathering together at pace to solve that particular issue, which is in a lot of the headlines and social media today. And there's always going to be people who latch onto those topics. I think it's more of what we've been doing really successfully. So mobilizing and putting actual resources into the solution and educating and communicating is the best way to address it. I don't know what the rest of the panel thinks.
I think the main showstopper is still the volatility, and this is just something we have to deal with for probably at least 5 more years. This is just growth pains I see. I mean, quantum threat, etc. I think that's, in the end, Bitcoin is a sort of community-driven asset. So once there's the necessity to solve severe problems, the community, everyone is free to contribute to Bitcoin and make improvement proposals. So, I mean, I don't really see those as threats. I mostly see volatility for the people that are new to it. I mean, as a maximalist, one Bitcoin is of course the trust factor that I hold on to, but this is the general challenge that we see, and with increased trading volumes, this will decrease over time.
I mean, that volatility, it's important not to underestimate that. So if you have a company that's maybe got a lot of debt, or maybe the operating business isn't doing so well, or you've got certain situations where actually are the company directors acting in the best interest of shareholders to put any volatile asset on their balance sheet. And obviously it's the specific situation that is going to make all the difference either way. But there's some key principles where we need to accept that Bitcoin is not for everyone, and actually it could be, well, maybe technically illegal in some cases.
Yeah, maybe interesting is the other side. I mean, as a Bitcoin company, making money on Bitcoin, it's also interesting because, there's a bear market now, there's a lot of compliance, overhead cost. So how do you build a sustainable business today in the Bitcoin space where you're not completely dependent on the Bitcoin trading volume? Like if you're just charging a trading fee. So for us, it's been Bitcoin-backed loans, because we're certainly making profit or revenue over outstanding loans denominated in euros, where Bitcoin is just a collateral asset. And as long as the Bitcoin is not liquidated and we push for low loan to values to decrease that risk, I mean, no matter what the volatility of Bitcoin is, we're charging interest every day. And this has been a wonderful business model for us, because what bear market is going on? Like, we have outstanding loans and we make money over that. So I think this is a general pivot in the market going on. And also from the family office, once they see that they can take out liquidity against their Bitcoin and they can utilize it in such a way, this will help with adoption further.
The biggest reservation for those who have not adopted Bitcoin remains as volatility. And when we were coming through to the IPO for XCE, we had conversations. It's not just investors, it's the regulators questioning volatility, and then it's the brokers. So we managed to be available on Hargreaves Lansdown, AJ Bell, who were the big UK brokers, but neither of them wanted to list the IPO. And it was conversation after conversation about volatility, and we were very fortunate that we were the only business at the time. When I look back, quite a few got rejected. We were the only business at the time that had a 4-year history of just buying Bitcoin as a long-term store of value on the balance sheet. And we demonstrated to them that as the Bitcoin price drew down 80% and then recovered, and we had a high return on our Bitcoin at the time in December last year, that our revenues had grew 37%, which meant we were in some manner negatively correlated to Bitcoin. We were able to purchase more Bitcoin as a result of that volatile period. And it just brings me back to a conversation I had with an ex-chairman of one of the top 5 British banks probably 3 years ago, who I met on a honeymoon. He was trapped on a safari with me in a car for 3 days.
Trapped.
So he just got Bitcoin for 3 days solid. And I remember having explained the entire thesis of Bitcoin and of Keynesian and Austrian economics and of sound money. I got right to the end of the explanation, and he looked at me, and his first words out of his mouth were, "Yeah, but it is volatile, isn't it?" And I just thought, I said, I thought you guys actually understood this and you were ignoring it because you were fearful of it. Like, that's an indication that you don't. So I kept educating him over the last few years. And when we got to the IPO, we participated in the IPO. And I said, have you bought any Bitcoin yet? And I think this draws sort of a comparison with how a lot of institutions think about the products that Bitwise are offering. He said, I haven't bought any Bitcoin yet because I don't understand it and I don't want to go through the risk of buying it and of custodying it myself, but I trust you now and I trust the business, so I'll just buy into the business and I'll leave it in my brokerage account. And I think that's probably the main unlock in not just corporate adoption but retail adoption and institutional adoption, is the products that are being built where some people might look at them and say, well, it's not cold storage Bitcoin. So that's not how you're going to drive significantly higher adoption in this period of time. They're going to come into it through different products and then they're going to find Bitcoin. It's a reverse adoption cycle for those people coming in now.
So on the safari, was it his honeymoon or your honeymoon?
It was
I don't know which is more
It was
scary.
my honeymoon, but you can imagine how my wife looked at me when he said he was the ex-chair of a UK bank. I looked at her and she also said, I don't. So I'm going to do it. Can I have an hour with you just to talk about the banking system?
To be a fly on the wall. Hey? I think one of the others, just to add to the reasons, is can be that, well, are enough other people doing it? So there's a certain comfort from being part of the herd. I think that's a natural human instinct. And you can argue, like with any sort of new technology, there's risks and pros and cons of getting involved earlier rather than later. So you've got all that consideration. We are seeing more. So one of our competitors in the UK has recently come out in favour of digital assets. I think they've maybe got a little bit further to go until they understand how Bitcoin is different from the rest of the space. But it's a big step forward for what in the UK the pensions industry is a very conservative industry. So I think there's lots of things moving in a good direction, in a healthy direction for proper discussion, which will be a massive help going forwards. So we've got a few minutes until we have some questions. So I'm gonna come to this one, Scott, with you, because I think you've got probably the best example here, but I don't want to put either of you two down in that respect. So this is to do with the use of Bitcoin. So obviously a company could buy Bitcoin and put it on their balance sheet, and that's been available for some time. And there's lots of considerations around that. However, there are other operating models starting to really come out and be public and better known, where Bitcoin has a wider role to play. So, Scott, I'm going to come to you first. explain your model? You've explained some of it already.
Yeah,
but we'll
so
get into it.
Building on executive recruitment, you've got an individual recruiter at their desk who is driven to generate £500,000 a year of revenue for the business. They'll be on a moderate basic salary, and the majority of their earnings are based on commission. So to scale in executive recruitment, you need to attract more revenue-generating recruiters. That's one of the industry's biggest problems, because how do you attract those recruiters when we're all offering similar basic salaries and similar commission schemes? Our solution at XCE is to offer similar basic salary, similar commission scheme, and then put on performance-based equity in the PLC topco as an additional incentive. And what that does is, if somebody's coming into the business and they're a high performer and they're going to generate £5 million over a 10-year career for the business and generate £2.5 million of profit for the business, that small element of performance-based shares at the start of that 10-year period that they're achieving by hitting target compounds performance-based equity for them over 10 years, that, as we know, over a 5 to 10 year period with a Bitcoin CAGR, becomes not just a powerful way of attracting talent, but a powerful way of motivating the talent and ultimately retaining the talent. So from a scaling an individual organisation point of view, the unlock for us is we're one of the, I can't think of any other executive recruitment firm that's gone public that's at our kind of scale with our scaling opportunity. And that's the unlock for hiring talent. And I believe that's an unlock not just in our industry, although it's uniquely suited to us, but also in other people-driven, capital-light, high-margin industries. And then the other way in which to actually integrate a Bitcoin treasury and use the treasury without needing to sell Bitcoin is the biggest problem in our industry for every single owner. They, as I mentioned earlier, they work in their own company their entire career, and there's no light at the end of the tunnel. There is, you'd never see competitors buy each other in our industry. The firm I started working for in 2012 was trying to sell at the time, and they're still trying to sell now. And if you can imagine from an acquisition and a roll-up point of view, there's 40 businesses in the local area, there's 500 in the UK, there's 10,000 globally. All of those owners are building up cash reserves and have cash-generating businesses and no exit. So the way we've modelled an illustrative example of an acquisition there is, if you take the UK, for example, if a private owner's built up a £1 million cash reserve or holds Bitcoin on the balance sheet, and there are competitors of ours who hold Bitcoin on the balance sheet, we could raise £1 million, purchase the shares off that individual for £1 million, and that gives them a really strong tax arbitrage. They couldn't draw the money out without paying circa 50% tax, but they can sell the shares and pay a much reduced, I think 14% tax in the UK. So they get a realisation at the time that is the exact same model as us raising money at a positive MNAV, and we are at a positive MNAV, and buying Bitcoin. But what we add on to that is the ability to then bring that revenue into the group, bring that EBITDA into the group, give all of their staff some performance-based incentives for the next 5 to 10 years, and give that owner what is an accretive model for the investors and earn out over the next 3 to 5 years, or however long they want to stay in their business and grow their brand. And there's a massive opportunity unique to executive recruitment in rolling those businesses up and scaling. The more we do that, the stronger the treasury becomes. And the stronger the treasury becomes using equity, using our XE Bitcoin bonds, using the ATM and having the support of yourselves, the board that we have and the likes of Adam back, the stronger the operating business becomes, because it just becomes more attractive to the next recruiter and more attractive to the next recruitment company acquisition. And I think if you look at that, if we can disrupt executive recruitment and drive that corporate awareness throughout every other industry, given our people speak to senior level leaders at these businesses, then the knock-on effect is you'll see marketing, legal and accountancy firms copy the model.
And that's actually a key point at the end. There'll be other industries which could benefit from the same principle, because not everyone is, of course, in executive recruitment. We're in the red. So would you like, if you've had points, you can maybe squeeze them in your questions.
Sorry that I have to push on timing. Thank you very much for these interesting insights. What are your questions for the panelists? Honeymoon and safari questions are explicitly allowed.
Arash, I wrote one down for you.
No questions? Hard to believe.
Firstly, thank you for the panel. It's brilliant, absolutely brilliant conversation. Just going back to the point on custody and the challenges of PLC, limited, LLC type corporates, etc. going through. I see a perception, and we can see this in the ETFs that I've listed, the number of ETFs that have used Coinbase as their custody of choice. One can only assume that that was just because it was an SEC hurdle where they were trying to reduce the friction of being turned down. And it's like, you know, if XYZ ETF has been allocated, then through Coinbase, we can do and tread in the footprints of this ETF as well. At some point, the regulators must see that their inadequacy in coming to market is demonstrating and perpetuating a systemic risk in this industry by not sharing the custody across proper organizations and a wider general kind of landscape. Where are we on that journey with the regulators? How comfortable do you think that they're going to get to be? And when can we get to a position where we can get to Scott's point, being cold storage as a corporation?
So from where we sit, you're absolutely right. There's a bit of a self-reinforcing effect here. So some really large asset managers choose Coinbase for their custodian. There's a sort of herd mentality, so others choose Coinbase. And then there's other dynamics. So for instance, when you're trying to onboard to large US wirehouses, it's a very long process, and the information you submit gets reviewed in multiple stages. And if you're using a custodian in the beginning of that process, it's awkward to change it halfway through. You'd rather just get to the end of the process, get onboarded at Wells Fargo, whoever it is, and then think about a revision to your custodian if necessary. But it is not lost on the regulators. Clearly, there's a concentration risk. Other custodians, of course, are competitive beasts, and they want to get a piece of the pie. So it's going to happen. We see some movements. I don't have any sort of specific dates or anything like that, but it is a trend which will follow its natural competitive course.
Yeah, maybe briefly to add on it, I think it's a very valid point. I think over 15% of all Bitcoin is held with Coinbase, which is quite a serious concern. And this is also a technological challenge that we need to fix. I mean, there's so many features in Bitcoin that we can actually utilize and that Bitcoin custodians would benefit from, and the users, which are not being used at all. I mean, in the end, we just try to like dig a hole and put the plate in there and just try not to touch it and build all these instruments around it. So just to answer your question of where we are towards the regulators, in MiCA or in Europe, this is quite written. So if you're providing custody services and you're using third parties, you really need to diversify, and we see like 3 to 5 custodians at other platforms being used. So that there's a start, there's something, but we still have quite a long way to go. I think like how we look at it, we were a Bitcoin custody provider. We switched to being a service provider. Why? Because the Bitcoin custody solutions are hard to sell. Selling a security solution is difficult to sell. And I think for the next 3 to 5 years, we're going to keep selling the services because the demand in high security software is just very low. And that's reality.
I'll add a quick point, Ben. So one of the areas that we go quite heavy on is around counterparty risk. And so ETPs have definitely got their place, or ETFs, depending on where which jurisdiction you're in, as does on-chain Bitcoin, as does potentially diversifying across different providers, or so there's a whole different range of solutions, and so that goes some way to mitigating your risk, but of course it doesn't stop it being a potential future systemic risk. I'm not seeing enough talk about it in the UK, but then I think a lot of that money is probably US based, so the UK regulators are probably less aware of it.
Thank you very much. Any further questions for the panelists? If this is not the case, a warm thank. No, I don't have a question. All right, go ahead.
So to wrap up, so I'm trying to make this a little bit different to the, where does the price go in 3 days or something? So this is more. This is more sort of thinking ahead over the next, it might be the next year or so, because at the start of this, you look back a year or so. So what would need to change in the environment that we're in the possibly the regulatory environment, but not necessarily regulatory, could be behavioral or economic. What would need to change for this to become, for Bitcoin specifically, to become a part of board conversations across the continent? Rather than just something that's discussed and feels controversial.
I think it's an interesting one, and it's a general kind of progression of maturity for Bitcoin. I think more of what we're doing, like more education, more institutional adoption, is going to help it kind of move it up the agenda. And I think a signal, maybe, that we have reached a point where it's at the stage you describe, is maybe there'll be some clues around the use of our language. For instance, we often talk about allocating to Bitcoin, but I don't often hear people talk about allocating to equities or allocating to oil. They generally say, I'm investing in equities or investing in oil. So maybe that'll be a sort of milestone moment where we talk about investing in Bitcoin, and it is one of many options and not such a sort of controversial consideration anymore.
Yeah, very brief on my side. I think that there's many products are built around like yield and optimizing Bitcoin asset management, whereas I think in general the adoption of Bitcoin is still pretty low, and we should put a lot more effort into increasing Bitcoin adoption. Let's get it out there. Let's get 10% of the people to actually interact, have some Bitcoin experience it, get used to the volatility, and understand it in full with education as well. And then it's so much easier to build conversations with regulators, etc.
I think my lane is more the hundreds and thousands of small privately owned businesses in executive recruitment where I can drive the biggest impact in driving conversation on Bitcoin. And I've had competitors in the same building as me now who have stopped me in the street over the last few months and said, oh, I've seen what you guys are doing with Bitcoin. And the first thing we follow up with is, we should all be doing that, shouldn't we? And then the next thing is how. So you're having that conversation and they'll look into it. But I think outside of this room's where the most important conversations are going to happen in the future. We're all in Bitcoin, and the institutions and the funds can look after the institutional corporate awareness and adoption. But ultimately, there are, not just in executive recruitment, but there are thousands upon thousands of privately owned businesses around the world all feeling the same effects of debasement, the cash value dropping year on year, with capital that is trapped in those companies. And there's no option when it's a people-based business. You can't buy property because you're tying up and it's illiquid. So that conversation about business, Bitcoin adoption in the private companies, I think it's far more important to have 1,000, 5,000, 10,000 privately owned firms. Bradley Duke mentioned earlier, we don't know how many private SMEs are holding Bitcoin. If every private SME is holding Bitcoin, you get a powerful network of people alongside the powerful network that is Bitcoin. And those people can then enforce a more serious negotiation with regulators to create a better environment that drives more Bitcoin adoption and normalize the conversation about Bitcoin.
Yeah, very good point to end. So grassroots from a corporate perspective as well as an individual perspective. Thanks very much, everyone.
Thank you very much. Big round of applause for the panel. Thank you very much.